Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, 27th of January. PCE came lower than expected. The PCE price index month over month came flat, 0.1, but the core PCE index year over year decreased from 4.7 to 4.4. Personal income came lower, slightly lower from 0.3 to 0.2, so less income, and spending came lower than expected. We expected flat, the same as before, and we got minus 0.2%. This is actually good news. Core PCE month over month, though, are slightly higher, 0.2 to 0.3, same as core CPI. We are seeing sticky inflation. But in terms of year over year and income and spending, all data shows that the US consumer are spending lower, having less income, and prices are going down. Remember that PCE is the preferred data, the preferred index for Feds in order to decide on interest rate hikes. So next week, this data is going to be key for them to assess the situation and decide on whether they start increasing, they continue increasing 25 or 50 basis points. If we check the FedWatch tool, actually 98% of analysts says that 25 basis points are expected. So these are good news. More news, Intel stock tumbles over 10% after brutal results, very bad results. The company posted 32 year-over-year decline in revenue. So this affected the Nasdaq at the beginning, but I think once we got at 8:30, 1 hour before the open, this economic data for PCE and personal spending and income, the move started. So let's check the charts. This is when we got the PCE 830. We basically chopped out a little bit and we didn't move quite until the open. And at the open, I think it was super clear until 12,193 that we were quite bullish. After that, you can see this ascending triangle that we broke to the downside. We tested support 12,100, and since then we are finding and grinding up with higher lows and higher highs. So this situation is super important for the daily. Look at this. This white line is the 200 simple moving average. We have these three rejections on November, late November and December on CPI, and we are now again after this double bottom at 10,700. We are again at these levels, crossing or trying to break through this 200 moving average. This pink is the 200 exponential, so it's less smooth than the SMA, but this 200 is key for the bears and the bulls. If we check the ES S&P 500 futures, look at this. This is looking pretty good. I already told you when we broke up and this candle, I uploaded several videos explaining that this is a market structure change. After this bottoming tail, we are pushing higher. We are at this pivot, and the next one is the infamous 4165 in the S&Ps. So this is a tremendous week. If we check the weekly, look at this. The weekly is looking super bullish. Strong candle, closing up at highs, and in the Nasdaq, we can also see a big, strong weekly. Weeklies are super important for long-term investors and are a quite important signal in order to break critical levels. And we are trying to basically break through 12,200. This is a critical level for the Nasdaq and for the overall market, and we are actually doing super good. This week has been, if we check the 30-minute chart, this week has been unbelievable. Since these lows price range. This is, let's check since the low of 6th of January. Look at this. This is a 13% push. And this week, if we check the weekly, look at this strong candle. This is unbelievable. Since open until top is 4.74%. And this candle was quite a signal, right? So overall, Nasdaq super strong. Again, Tesla with a 9% in the green today. Amazon consumer discretionary 2.89. If we checked XLY, 2.50. Let's check the daily. This is the breakout that I was expecting. This pivot is now broken. If we check the daily, again, a lot of tech stocks and a lot of sector funds, depending on US consumer sentiment and technology, are putting nice green candles. This on the weekly. This is 6% on the week for the XLY. XLK, also big green candle on the weekly, 4.32%. Financials also doing good. And the most important thing is that XLP, staples, XLV, healthcare, and XLU utilities are pulling back. So we are seeing this rotation from defensive sector funds to the more aggressive growth stocks. And all of this is based on earnings. People are starting to basically jump on these growth stocks again after Microsoft mixed earnings, Tesla big earnings, and next week and the upcoming weeks are going to be also with Apple, Amazon, Google, Nvidia, and so on. Meta 3.42%. Look at the daily on Meta, because still a lot of work to do, but we are reaching 200s in a lot of stocks. That's key. The only thing that is concerning is, first of all, well, now actually we are rejecting. I didn't check that because I checked in the morning at these levels, and wow, crude oil is pulling back. This is super good. So look at this. We are rejecting 82% and we are supporting $80 a barrel. That is the price at which the SPR, the Strategic Petroleum Reserve of US, is going to replenish again at 80. And we are basically rejecting. Let's check the weekly. Yeah, the weekly is quite a pullback, but still these levels are in play. But I'm quite surprised, and honestly, this is good for the economy. Energy needs to cool down in order for inflation to also keep at low levels. Natural gas, if you didn't check this, look at this. Natural gas is being destroyed. Since we rejected the 200 again, we've been pulling back and going lower and lower and lower, 58%. I was expecting 5, but this, we are at $3. Wow, this is unbelievable. If we just hide everything, if we, let me show you, if we hide all, will you be buying this? This is unbelievable. This sell-off is incredible. I don't know exactly why there's so much selling. Okay, so let's go to the dollar and check yields. Dollar still at lows. So apart, number one, check Nasdaq and tech stocks are doing fine. Number two, checked sector funds are in the offensive, risk on, not on the defensive. And number three, energy is pulling back, rejecting higher pricing. What else do we have to check? Dollar is still at lower levels, 101, 102, still consolidating down here. I don't think dollar is still bullish. We can just break this 101 and just free fall until who knows. So dollar is still not the play. And this is good for earnings, but yields are holding and actually doing higher lows. This is the only thing that I'm concerned before next week's interest rate decision from the Fed. It's still not clear if we are going to see 25 or 50. A lot of analysts are expecting 25. We can be wrong, but 25 is the most logical move from the Fed. But bonds market are not selling off, are not pulling back. One should say, okay, we should be seeing, like these lower lows, lower highs, stepping down the same way the overall market are pushing new highs. But still, there's no divergence. We are seeing consolidation and green candles. So let's check. On April, we are still at 4.8 interest rate, same for September, and no change on December. So bonds market are still saying, okay, Fed, you said you were going to push 5. We don't trust you. We think that bonds market are pricing in 4.8. That means from now 4.5. 25 basis points next week would be 4.75. That's more or less this terminal rate. And we are going to be at that level since September. That's not what Fed said and shared with the press in the press conference. They said 5%. So someone is wrong. Either Fed are not prepared yet and that they will go for 5 in the upcoming months, or bonds market are wrong. And once the Fed start hiking again, maybe 50 next week or 25 plus 25 on the next months, that would make bonds market to go up again. But this gap in between the 5 and the 480 that is priced in bonds is quite concerning. And also it's quite concerning the fact that bonds market are pricing in an interest rate cut in December for 25 basis points from 480, 475 to 450, 25 basis points cut. And again, Fed said that they are not going to cut any interest rates in 2023. So that's the only thing that we have to take into account in all this economic data that we are getting, that is very good. Let's go back to the Nasdaq. We are getting pretty good economic data from CPI, from personal spending, from PCE, from home sales. Labor market and unemployment are still strong, but that is also a good thing in the long term. Once we are at high interest rate, we need the economy to hold and to show strength in order to have the soft landing that a lot of people are waiting. So good news are good news, more or less, but bad news are not longer good news. Sometimes bad news in the economy mean that fear of recession is going to be hard recession and hard landing. So be careful how you interpret the data in the upcoming weeks, because I think we also want, apart from cooling on several sectors of the economy, we also want strong economy. So GDP growth, growing and holding, that was good. And also labor market and jobless claims going lower than expected was also good for us, because that was a strong signal that the labor market is holding with all these interest rate hikes. So you have to try to understand everything. Is super complex, the situation in which we are right now. But the situation is sector funds are rotating to the offensive. Nasdaq and tech stocks and earnings are doing more or less pretty well, some misses, but I think overall value is still there on the stocks. But a dollar is still low, consolidating. Energy is rejecting key levels. But the only thing that is quite concerning, in my opinion, are yields and bond markets. So be careful with that, and you will be doing fine for sure. So this month has been the first month of the year. It's been awesome. If we check the monthly, look at this. This is almost a bullish engulfing candle. We came from -9 in December to +10 on January 2023. This is going to be key. And I think that's all. Congratulations, Bull, for another day in a row of profit. If you are a bear, be careful going counter trend with all these economic data and fundamentals that we are getting. I also think that some pushes we are super extended on every time frame, but that doesn't mean that we can't move higher. Be careful, bears. Congratulations, bulls, and I think enjoy the weekend. Remember that today is not over yet, but for sure we've been getting nice move during this week, and next week is going to be key. So let's check for next week what are the key days. Monday we have nothing. Tuesday we have Case-Shiller and home prices index. Wednesday we have unemployment, that's Europe, manufacturing and jobs. So on Wednesday we have one key number, and also in the afternoon the Fed interest rate decision. We are, as I said, expecting 25 basis points. Thursday, nothing, well, jobless claims and all that. So, and Friday, unemployment. So be careful on Wednesday with jobs and manufacturing before this interest rate decision. This interest rate decision is going to be super volatile on Wednesday, but on Friday, we need this to go down. Actually, we are expecting 3.6 and payrolls decreasing. So we'll have to see, but next week again, we are getting important economic data. And again, you will have plenty of opportunities to take profits off the market. As always, thank you for your time. If you found this video useful, please remember to click the like button and subscribe to the channel to receive notifications when I upload new videos. Please support the channel, support my growth. I provide you with a lot of information, technical, fundamental, and I spend a lot of time with you guys in order for you to learn and to be able to trade the markets. Remember that I upload new videos every single day for market forecasts, market updates, and market recap. I appreciate your time, and remember that the trading day is not over yet. We are right after the lunch hour, so be careful with the power hour, but we are quite good on the day. Discipline and risk management are always our key for your success. Stay safe, everyone. Enjoy the weekend, and see you on Monday.